Afternoon, everybody. This is the video that I promised on the silver trade, which is not looking great, but I'll get to that at the end. Okay, so $26, with the exception of right here, which was a high of 27 and change, but closed at 26.16 and was a reversal, is where silver goes for the bull markets to die. So we are right there now, 26.01, 26 up, 3.7%. We still have these higher lows, but I'm just, this is 26.36 is about as far as I would expect it to go. Um, and the reason for that is because the bonds look like they are, in fact, breaking down also. They're down 24/32, which is uh, 3/4 of a point, which is pretty excessive. And I'll show you what it looks like. This was in my video last night. Here's the bond. The low here was 117.11. The low here was 117.05. That's not particularly meaningful after the decline yesterday. The weekly decline so far in a day and 3/4 is literally over 2.5 points. So as interest rates go up, things that do not provide any interest tend to go down. The other thing is that as bonds fall and rates go higher, we generally get an increase in the dollar. So here's a chart of the dollar. I'm going through this everywhere. The dollar looks as if it has broken out um, above this long-term trend line. So we're coming to an apex. All of the moving averages have turned up. The 5 is through the 20 week. And basically, right now, we are actually sitting on top of this red line, which is the 100 week. There should be some trouble in here between 105.5 and let's call it 106.5. But the longer term MACD is turned up, and this is generally a market that trends. Back here, we were talking about the drop in open interest, which in a down market is long liquidation. Now, for the last 3 weeks, we have exactly the opposite. We have open interest moving up while price is going up. That is not short covering, that is new long positions. As far as the actual silver chart, SLV, we have this high. What I want to point out is that this is a market that turns on a dime. On this particular day, we closed at 23.94 on the absolute high. The next day, we were $1 lower. Same situation here, closed on the high, and then came right back down. This is a daily, so this decline is literally 5 or 6 days. The option that I chose has roughly 8.5 trading days left. The other issue here is the fact that we rarely go out of the top Bollinger Band. That's this line here, and the lower is this line here. On top of that, we are overbought. The blue line is on balance volume. The red line is the 75-day linear regression. So that's a return to the mean type thing. You don't see this kind of distance from the mean very often, and it generally signifies a turn down. So, uh, last but not least, I just want to make mention of the fact that this is a relatively small position. The options account is up 25% or 2,500 on a $10,000 valuation. This entire position is only, uh, let's just go here. This entire position in the option account, let's go back to the option account. Well, I'll use this one. This entire position in the big account is $330. So in the small account, it's roughly half that. Half that, even if we call it $170. At $170, that is 1.7% in an account that is up 25%. So, from a risk reward and an appropriate sizing, even if this goes to zero, we would still be up over 23%. So, for that reason, I'm holding this position. Um, I might even round it up a little. We have eight. We have 15 in the big account. We have eight in the small account. To buy a couple more down here to round it to 10, I would definitely consider that, but I'd have to see some action that justifies getting into the position. So there you go. I hope everyone understands all of the reasons that I'm in this. It has been very consistent, and I expect it to continue. Have a good day. Any questions, you can just either hit me on the Discord, either in the main room or behind the curtain, or you can direct message me. Thanks.